go.
What's going on, everybody? What's up, happy people? This is BGFAX Legend, and I'm back with yet another video. So after putting out the supply and demand video, and a whole lot of people were requesting that I go deeper or I delve deeper as far as marking supply and demand zones is concerned, and I thought it's actually nice to do a quick video and just show you some ways in which you can actually mark your zones. Yes, it's quite important to identify the zones, but it's also important to mark and sort of to create a system whereby you have consistency in your trading. And I need to emphasize that once you pick one, make sure you stick to it, or you pick two, make sure you stick to those two ways that you're going to use within the markets. And also I need to put it out there that we do not, or I do not just trade supply and demand zones for the sake of just marking zones. There are a whole lot of systems, a whole lot of concepts that I use within the SNR and supply and demand, and I tend to reverse engineer certain concepts that a lot of traders say they do not work. There is a way that I've managed to see these things within the markets. So I'm trying to share my own experience. I'm trying to share what I know, what I think is okay, and what I've been using with my students, and it has been an amazing journey. All right, so generally you need to understand these 6 ways of marking your supply and demand zone. The first one being marking your zone using horizontal ray lines, right? The first one, marking your zone using horizontal ray lines. And I need to show you guys how you can actually do that using this. So if you remember from the first video of supply and demand, I taught you guys how to mark. I taught you guys what supply and demand is, and I gave a few examples of me marking and the types of zones. So you have the indecision type of zones, or the engulf type of zones, your strong leg out, and all those things I was talking about. If you haven't already, please go and watch the video. The link is in the description as well, and I'm going to pin the video in this video so that after this video you can also go and watch. Please go and watch that one first before you watch this one, right? So when we are looking at these candles, let's assume this is your rally base drop, right? And you are trying to mark your zones. So the first way that you can do this is to use horizontal ray lines, whereby you just pinning the last up candle like this. Let me see if I can make this line a bit thicker. Trying to see how I can make this a bit thicker, right? Something like this. Beautiful, right? So you can mark this from this zone to this zone like this. This is still your supply and demand zone. Okay, so let's just do this quickly. All right, beautiful. So you can see, you can just mark from the low point to the highest point, and then you have your zone, right? So you can just leave your lines, mark with the lines, this lower line and the upper line, right? That's one way of marking it. Or you can do the most common one, which is also the way I like to use this rectangle tool, depending on the application that you're using. So you're just marking from this point to this point. That's also another way. So I'm just giving you like a generic way of whatever you want to use, stick to it, whether you're using your horizontal ray lines or you are going to use the rectangle or this this box that we are going to be using, right? So now that you understand the 2 ways, personally I love to use the rectangle box. I like to use the box for my zones, right? Because it's not a line, it's a zone. However, if you're using lines, you're still demarcating a certain zone, to say from this point to this point, right? So the other way that you can mark your zones is to mark your zones from week to week. That is from the distal line to the optimal line, right? So when I mean from the week to week, you see this week point, that's the lower point, up to this weak point, which is the high point right here. and I'm marking the whole zone. That's the most basic one. I like to use this one in places where I feel like price might not get to the levels, and it's also consistent. It's also consistent, and if you had to use that, it's really nice. It's amazing, very simple, from week to week. So from your distal point to your optimal point, right? That's one way of marking a zone. The next way of marking your zone is to mark your zones from the bottom side of the body to the wicks. Now, I need to emphasize this, that you can be able to do this if you do practice. You need to go, guys, and practice whatever I'm showing you guys. All right, so from the week to week, from distal to optimal. The other way you can mark this is from the body, this body section, right, up to the highest wick point, right? So in this case, I'm sure you can see that I'm using this wick of this bearish candle. Let's assume that this wick is higher than this one. We want to cover the wick with the highest, that covers the highest distance or the highest point. So from wick, from body to wick, this is also the best way of marking this. So when price comes back here, I'm looking to look for my trades, right? So either I can mark it like this, or I can mark it like this. So these are like my favorite two ways of marking. I just use them interchangeably, right? Depending on what I'm thinking, depending on my mood, obviously. So that's one way of doing it. The other way of marking your zones is to basically mark your zones on the baseline. Okay, so what is the baseline? This is the upper top of the zone. So I'm just using a reversal drop, rally base drop, which is a selling or supply zone. You can flip this for a demand zone, your drop base rally. Okay, so when you're going to find your baseline is this top section where the bodies are, right? So if you go on your charts, on your trading view, and you switch onto the line chart, okay, you will see that all the wicks or the tails of candles are going to disappear. What you're left with is something, you see something like this, like a line, a turning point like this. That's where you're going to place your distal line. Unfortunately, I cannot do that here, but I'll show you when we are doing examples. Okay, so that's where you're going to mark your baseline, your market baseline. Okay, that's where you're going to mark your market baseline. So this is your baseline. This is your baseline. Okay, so I'm just going to say BL. That's your baseline. That's where you're marking your baseline. So you're marking your baseline from this top up until the top. So you can use again the way of marking with horizontal ray lines, just like what I've done here, or you can use the way of marking with this two again. That's also another way of marking your supply level. Now, I must emphasize that this is really nice if you're looking for sniper entries and tighter entries within the markets. But however, sometimes price might not get to that level. Okay, so it's also wise to know the disadvantages of this way of marking. Okay, so that's another way of marking on the baseline up to the top wick. The other way you can mark this is marking on the 50% of the from the wick to the wick of the last up candle, which is this candle. So if we look at this candle, so I normally like to use this gun box. You can use the Fibonacci 2 or this gun box from this point right to the high point of that last up candle. In this case, if I stretch it out like this, I have the 50%, or I have the mid section of that, or the equilibrium point, if you may put it that way. So this is where you want to put your zone. This is where you want to put you want to mark and put your the lower point of that zone, and then you stretch it out, something like this. So this becomes your zone. From this point to this point, then you're anticipating that price is going to come to this level, and then you sell. So in most cases, what you can also do is you can decide to just mark the whole zone, like this. You can decide to mark the whole zone like this. Let me show you guys. You can decide to mark like the whole zone like this from week to week, something like this. And then you can just leave it like this with a gun box. Or if you want to be very, very precise, you can just keep this and you say, this is my zone, my 50% level. So I'm not getting anything below. I'll just get anything here. And you can use lines as well. That's also another way. The other way is to mark your supply zone as a range. So I'm sure you understand that when price is moving or dropping, let's say it's dropping within like a downtrending market, it's creating lower highs and lower lows, or it's creating sort of like retracements and then or corrective phases and push phases within the markets. What happens is that this becomes a range whenever we break. Obviously, within the range here, we are looking for the last up candle as a supply, but in this case, you are marking the whole range. So another way is to just mark the whole range as a supply. So in this case, we will assume that this is actually the range from this low point to the high point, something like this. We are going to assume that that is our range, assuming we have two candles. That's how you can actually mark. So key notes, guys, to keep here, right? You must see the signature, right? Obviously, you must see that strong leg out. Okay, you must see that strong leg out. And we spoke about it in the first video. Go and watch it, guys. And you must also see your Ingolf structures or indecision candles. And I need to emphasize that this does not just end here. I'm just giving you an introduction, the basics of understanding supply and demand, or marking these zones as you are trading within the markets, and minimize confusion. Okay, so if you really enjoy this content, or if you are enjoying this content, please click the like button. Make sure you subscribe so that each and every time I upload a video, you get to watch it. And don't forget to leave a like. Okay, so let's continue, guys. All right, guys, so as you can see here, we have a downtrending profile. You can flip this for an uptrending profile. So looking at this price action here, I'm going to use this example first, right? And it actually has all the things that we spoke about. The market is in a downtrend, creating your lower highs, lower lows, right? Please leave a comment if you want me to do a structure video, okay? Where I'll teach you guys how to mark structure, how to mark market structure. So the market actually broke this structure, and then we can see that it also took out this previous low right here. Okay, now where is our supply zone? We have two kinds of supply zones here, but I'm just going to focus on the extreme one, right? It actually has all the details and everything that we've spoken about in the first video. Please go and watch the ultimate supply and demand video. Okay, so if we are to mark according to what I've told you, now I'm showing you on the real examples. You can use your lines like this. So this is the low point and the high point, your distal and optimal line. That becomes your zone, something like this, and you just keep it, right? That becomes your zone, such that when price comes back to this supply, you are looking forward. You're looking forward to trade. Okay, you're looking forward to trade with your whatever confirmations that you're going to use within the markets. Okay. Secondly, after you're done with this, the second way that I've showed you guys is to just mark the low point to the high, something like this, as a rectangle or this zone. This is actually my favorite, right? To just mark it like this. This is my favorite, to just mark it like this. The third way of doing it is to do this. Let me just zoom out a little bit. It is to mark from the body to the highest wick, as you can see here, something like this. This is also my favorite. The fourth way of doing it is to mark from the 50% of the zone, which I'm going to use this gun box, something like this. Right now you have this zone, so this becomes your point, which I'm going to just use a line, and then we do this, something like this. We anticipate that the market is going to come to this 50% zone. The other way of doing it, like I said, is to mark the market baseline. From the market baseline, which is the top section of this zone, from here, this body, and then to the wick, something like this. This is the tightest way of marking it. It has got its own pros and cons, within the markets. So if we look at the previous based drop here, just to show you something, we can see that if we are to mark according to how I've showed you from the week to week, right, optimal distal, you can see that the market penetrated inside the zone, and then we see a sell, okay, which was amazing because it actually worked, right? The second way of doing it is to put it from body to week like we did here, and you can see that price actually worked. The other way that I spoke about is if we are to mark this from the week to week, and then we stretch the 50% way, now you can see that the market just penetrated above the midpoint, just like that, something like this, just above the midpoint. So you would have ignored all this price action, okay, and then you just focus on price. As you can see, the market just tapped a little bit of that zone, and it's actually quite interesting to see that the market actually penetrated or tapped the 50% of the 50% range, which is quite interesting, right? Now that's also another way. The other way that we could have done is to put price on the here and to mark the zone. It was actually a very tiny zone from here to the highest wick, right, which I believe I'm going to cover this candle, okay, or you could have just done this. Now when you're looking at this, right, you are going to see that the market might have actually missed this, but I believe in the future we might see price targeting these highs, okay? So that's it about this zone. So I'm trying to see if I can get you guys a zone, like a buying zone, where I will mark all the zones, and then we explain everything that I'm trying to explain. But if you just flip the coin, if you just flip everything that I'm trying to say, you'll see that your accuracy level within the markets is going to be very, very high. So I'm just trying to find one more example before I actually leave. Okay, let me use this one, right? So if you are looking at this, we had a drop based rally here, and we can see that if we are to mark from the body to this week, this would have been our range. Yes, price penetrated a little bit, don't worry about that. These are called fake outs. The market would like to just go a little bit below before it actually reverses. So if you mark using this method, or you could have marked using this method, because this is the last down candle, this would have been perfect as well. Or you could have actually marked the wall section looking for the 50% zone or 50% point. As you can see above here, we could have traded. If you have used the market baseline from this point, obviously up to this point, like I told you, when you use your lines, I see the market was swept, the candles failed to close below. These are some of the techniques we use to mark our zones. So, ladies and gentlemen, really love to see what this. Make sure you are alive, you leave it comment, and you share this video with as many people as you can, so that I can be able to create more content for you guys. We want to create this a hub, make this a hub for a lot of traders, for a lot of many people. So who are we, or who am I? I am BGFAX Legend, the CEO of Blue Gold Aura Trading Academy, right? What am I trying to do within the industry? It's very simple. I'm trying to elevate your trading career so that you can become a multiple figure trader within the industry, right? I believe that we have the best leading trading education. So gain access to the best Forex trading education in the world and benefit from a superior trading models. Achieve financial freedom with BGFAX Trading Academy, the leading trading hub. Don't trade blindly in the markets. Our simple rule-based trading strategy and systems give you a clear head start and plan designed for beginner, advanced, and intermediate traders looking to get funded and trade within the markets. So what is our strategy, or what do we really trade? Okay, so it's very simple. Learn institutional trading and master market makers manipulation. I trade price action alongside supply and demand. Okay, so you're going to gain A to Z simple BGFAX, SND, SNR, golden, unicorn, A+ setups with entries, exits, risk levels, and trade management, all designed for consistency. So we trade Forex, synthetic indices, crypto, and futures markets for people who trade futures. Okay, so ladies and gentlemen, see you in the next video. A peace.